Okay, guys. Okay. We're back with another little episode, and this is going to be really just a short one because this is just this content is quite a self-explanatory one. Like, there's not much to it. It's just understanding how to use it in alliance with the other techniques we talked about. In terms of ranges, in terms of liquidity, in terms of blocks, breakers, that kind of thing, right? So this one is really just something you can add to your trading, and I more or less use it, in every single time frame. But it's quite useful on, the daily charts to frame trade ideas. And I think it's when you start doing this, I'm going to be using a 4-hour chart to show you guys, just to show you this bit of price action. But you really want to use it on the daily and break it down and use it then, and then break it down and use it on hourly intraday trends time frames as well. But today we're going to just be talking about institutional levels, right? And more or less what these are is they're just areas of their levels in price, right? That the banks use to pivot certain pivot price off, more or less. That's more or less what they are. I use them in alliance with breakers and blocks because they show me what breakers and blocks are more likely to hold than others. Also, and then obviously when you're accompanying that with range tactics, and when you're accompanying that with market structure breaks and bullish and bearish trends, they can be very, very powerful, guys. Okay, so I just want to show you what they are. So to me, institutional levels are usually full figure levels and then mid figure levels. And what I mean by that is they are full numbers, right? So they have, when you go into let's say we're talking about the fiber chart here, your USD, they're 100 levels or they're 50 levels. And inside the framework of this fiber chart here, what you'd be looking for is you'd be looking for a price. It's usually the second number after the decimal point. If you're on a 4-hour hourly, it's the second number after the decimal point that you want to be focusing on. That will be the full figure number. So if we're looking at this, if we're going to draw one out now, guys, we want to be looking at, let's say, like the full figure number in this chart would be like 1900. All right, 1900 is a full figure number, and 1850, which is around here. All right, guys, let me just draw these out for you so you understand. So to me, 1850 would be a mid-figure number, and 1900 would be your full figure number. Okay, guys. So this is what I mean by when I talk about these are the main types, right? So we're gonna go into more detail in a bit about the different types of institutional numbers, but these are the main ones you want to be focusing on. And these are the ones that the banks tend to use quite often to pivot price off. And usually what you'll find is you'll find highs and lows, right, around these levels. And the reason for that is because the banks are the ones moving price, right? So they pivot price off these levels. So that's why you see highs and lows being formed around these levels, right? If you go down to the 1800 level there, we see, quite this level was used as resistance. And we go down to 1750. What you'll find is that you'll start to see that price usually forms highs and lows, or you'll get quite a lot of highs and lows wicking through these levels, right? So it's the same thing here. You look, you see price find almost like it's finding support at that level. It's like it's an invisible support level because we're not at that block there. We're not at a traditional, support and resistance levels. You're just seeing price, unwilling to go lower at that price point. And what's more or less happening is that the banks are using this level to average in on their positions, guys, okay? So whatever cheekiness they're doing behind the scenes, these are the levels that they use to manipulate price on and to print highs and lows in the market on. Okay, guys, and it's the same thing. I can draw these, I can just keep drawing them down. And we're using the 1700 full figure level. What we're going to see around that level. Let's have a little look. We're going to see there's a block that's formed around that level. We've seen various areas of resistance around that level also. If we continue to drop it down to 1650, what we're going to see. Again, guys, very strong support level here. Price used that support there, bounced up, broke below it. Once it got above it, again, we're seeing wicks go through that level again. What do we see here? Price missed that level just shy of it. It broke above it. We see a consolidation at that, 1650 level, and boom, we see a little consolidation. A block was formed there again. Price broke below it. Price paused at that level again, and we see a movement higher. So as you can see, guys, the 50 levels are very, 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 very poignant. I think on Fiber likes the 50 levels and the 25 levels a lot more than the full figure levels, which are the 100 levels. But they are all important, guys. They are all important levels to take care of. I think if we go to this side of the chart and we put a horizontal line on that 1850 level there again, guys, what do we see? We see a high that was printed there. If we go back, we also see price consolidating there, and we see an expansion to the upside. Once price broke below that level, we see a block form there again. We see price again print another high there and then go to sell off. So when you're when you're doing your trading, guys, when you are marking out, when you're doing your top down analysis like we talked in the previous video, what you want to be doing also is looking to see, is price forming highs and lows near these levels? When you're looking for your blocks, look to see if your block or the area that you're looking to get long or short in, are there an institutional level inside that area? And in this case down here, this would have been a good level, right, to act as support this week. Why? Because it is a level that had previous history around it. You can see that it's been used several times to average in. So that's why you saw the consolidation there and a minor expansion to the upside and a retracement down, and then boom. So this would have shown you that, okay, if price gets above this level, then that is a good area to get long from again, guys. Okay, so if we were going to use now, if price dropped back and took out a high and it drops back into that range, then this would be a good level to start looking alongside blocks. We've got a block that's just been formed there. We have a breaker there. This would be a good level to go along from because it is also an institutional level, guys. Okay, so it already has interest. The market makers already have interest in this level. All right, they already know that, okay, we've seen them average in on it. We've seen them use it as support and resistance to average in their orders on. That is an interesting area that price could use as support if it comes back down to it. So these guys, they just give you more confidence in the levels that you already have marked out, because we've all been there when we mark out. We understand the range high, we understand our lows, but we're just thinking, is there a bit more, how can I get a bit more confidence on the trade I'm going to be taking? And this is a very good way to do that. And you want to do this on the day chart first, because what it will do is you'll usually see proper swing highs like this one formed around a 50 level. And what that will do is, well, let's say that swing high hasn't formed yet and price is just continuing down lower, find support at that block there. You can target, you can say, okay, we have a 50 level there. Is that going to be, that just gives you an indication of whether the price is going to break above that level or it's not going to break above that level. This gives you that extra piece of confidence, because if you already have previous history around that area, then you can think, okay, that would be a good area to take profit on after that high is taken out. Because why? It's an institutional level, which means that it has interest there with the market makers. So that's why we saw a massive look. Once price came to that, that resistance area, which was also a block to the upside, massive expansion to the downside. All right, guys. So these levels are very, very pivotal, and when when you get massive price movements, you will usually see price pivot off these levels. All right, guys. They will usually use these levels as pivot levels, and they're very important. They're very, very important, and it's a good thing to add to your confluence on your trade as well. So we go and draw these out further. We've got our 50 level there. Look at the price action at that level. Beautiful. If we even go further down, and we have a 50 level here too, guys. Let me just get that for you there. What do we see here? Again, we see price using that level as support. Yes, it broke below it and formed a block to take out that liquidity below that low. But when once price got above it, boom. What do we see here, guys? So that buying opportunity I was talking about in the previous video on Fiber. What do we now? We now have a block that is, with a market structure break, price retracing back into this defined range, However, what do we have now? We now have, you know, another stronger piece of confidence at level that level is most likely going to hold. Why? Because it is an institutional level, which means it has institutional interest at that level too. And as you can see, price used that level as support before. So once it breaks above it, and now that we have the block, we have two strong pieces of confidence that that level would be a level that price is going to hold off. All right, guys. Maybe we use the Fibonacci level. So let's say we got a retracement. Let's say we were going to buy from the area. Price broke a structure high. It retraced back into the range, back into a block, and now we have our, now we can couple that with the institutional 50 level. Boom. Perfect trade. All right, guys. So really, what you want to be doing is you want to be using these as extra bits of confidences alongside, whatever you're doing already, guys. So you always start with your range. You always start with your market structure. You want to break it down the blocks and liquidity, but also you want to throw this into the mix, because this will show you when you're really going to get powerful moves of certain levels, and why certain levels will hold and others won't. This is the missing factor in that equation, guys. So I want you guys to go through your charts and really go through it, because yes, I'm using a 4-hour chart, but this happens in every single time frame. All right, guys. If you go down to a 50-minute time frame, even if we go intraday, I can probably show you some on intraday as well. Like, these levels still play a significant role. All right, guys. I mean, let's say we're looking at intraday, because you get 50 levels on almost any time frame, guys. So let's say we've got a 1600 level there. Boom. Beautiful level for support. If we can break these levels down onto a lower time frame so well that we just get perfect entries off them. I mean, look at that, to the tick. Literally to the tick, guys. You found support there again to the tick. Okay, guys, like, this isn't by accident. There is no accident in these in these equations. Okay, this is just understanding your framework and using it so that you know when price is going to seek certain levels. And look, that's the 50 level that we had drawn out, guys. What happened there? Price, more or less bounced from one 50 level right up to the other. Wick above that level, drop down, and as you can see, there's a consolidation at that price point there. So yeah. All right, guys. So what I want you to do is go through your charts this week and study this. Whether it's fiber, whether it's cable, this happens on any pairs. I think the yen pairs are beautiful for this. So, like, they really respect 50. You can literally blindly trade a yen pair from one 50 level to another. I mean, don't quote me on it, but I've done it before. Literally long enough one 50 level to long it to the other. They literally are like perfect support and resistance. So yeah, they're very important, guys. And go through your charts and make the most of them. All right. See you in the next module.